Greetings, traders. Hope you guys are doing good. How is trading in 2026? And to the people who said that this is their year of becoming profitable, so far, how are you doing? I would love to know how trading is taking you. This is my very first video on YouTube, and I would love to interact with you guys. Tell me on the comment section how trading is for you. I would love to interact with you people and like the video to just help it move a little bit more. And I hope that by the end of this video, if you've had a trading model and you've been unclear about it, or if you've been guessing on what pair to trade, how to trade, what time to get into trading, then I hope this video is going to be of help to you. I've been a trader for a while now, and I'm going to say 1 year profitable, but I've been a loser trader for like 3 years. And so I have had my fair amount of losing in trading until I settled on something that gave me profitability, and that is settling on one setup, one trade setup, doing the same thing continuously over time. No matter how small the reward is, I always make sure that the reward is consistent. And so today we are going to check USD JPY, and hence the title of today's video is Trading USD JPY. So before we delve deeper into the trading today, I just want to remind you guys that this content is for educational purposes only. I'm not providing financial advice or investment recommendations. Trading always involves risk, and you are responsible for your own decisions. And just to make it clear outside there, I don't sell signals. I don't have a group. I'm not going to have one. And I don't have any mentorship. In this day and age, I don't think you need to have a mentor in order to be profitable in trading. That is my opinion, because there is information outside there that will help you be profitable, this being one of them. Everything you're going to need from me, you will get it in this video. There's nothing extra you need. You don't need any private conversation, any private reply, my email, my contact. You don't need them to be profitable. What I'm going to share with you guys here is all you need. And I have to give credit to where credit is deserved. So I'm going to mention some people I've learned from over the course of time, so that even if you want to learn from somebody, you can always learn from them. We have the mighty and mightiest ICT, Inner Circle Trader. That guy is great. We have got It's Tom Trades on YouTube, wonderful man. We have got Jade Cup on YouTube, wonderful man. We have got Khan ICT, a wonderful person. Those people are so good. They're so great at what they do. And if you've ever been wondering whom maybe to follow more, they are good people. Enough with the chit chat. I'm going to delve into the charts and into today's lesson. So our focus is to trade the USD JPY, and the yen is a Japan currency which is in Asia. So we look to trade this setup during the Asian session, and we are only going to use the 1 minute time frame. We are only going to focus on the 1 minute time frame, but there are instances when the 5 minutes and the 15 minutes time frames always comes in an ante. And in those, don't mind the noise that's outside. I'm so sorry. There are times when the 5 minutes and the 15 minutes time frame will always come in handy, and they'll always help. but it comes with context. And it is something that as time goes by, you'll be able to know when to use the 5 minutes and the 15 minutes and when to just stick to the 1 minute. And I know you already have a question, what is how to get the daily bias? So I spent a lot of time trying to master the daily bias, and I ended up not profitable. And so I stopped looking for daily bias. I no longer look for daily bias. I don't. The day I stopped looking for daily bias, I started seeing so many setups. And our aim is to just tap into a small price action. My encouragement to you is that tap into a small price action that is consistent and don't be greedy. That's my encouragement to you. In our trading, in our price analysis and our price study, we're going to use TradingView for analysis and FX Replay for backtesting. You need to know how to use TradingView. You need to know how to use FX Replay. You are going to use these two tools in your study journey and in your backtesting journey. Okay? All right. So let me introduce you to our model today. So when you open your charts in TradingView, I'm assuming by now you already know how to use TradingView. So you open your charts and navigate to USD/JPY. And when you check through USD/JPY, there are so many brokers there. I personally prefer analyzing with the charts from Oanda. I just like them. The price action seems to be cleaner there, and unlike other other brokers, I love Oanda. Very important. Make sure that your chart is in the New York Times. Okay? Make sure that your chart is in the New York Times. So you may feel like I'm wasting time, but that's a skill in trading. You have to be patient and you have to be very keen with details. You've noticed I've not opened any chart yet because I'm putting together every information that you're going to need in order to be profitable with this strategy. And if you feel like you're bored, you don't want to be here, then this is not the place for you. Because that rush is what is going to cost you in your trading journey. Make sure that your chart is in the New York Times. Confirm and make sure that your chart is indeed in the New York Times. And if you already set your charts, if you already set your charts in the New York Times earlier on, confirm again. Okay? Make it a habit to always confirm that your chart is in the New York Times. So in this strategy, as I said earlier, we are going to be using the 1 minute time frame, and that's what we're going to focus on. Unless there's a scenario where we have to go to the 15 minutes time frame, and you'll always know when. Okay? So in this model, I assume you have basic trading skill sets and know how to use TradingView. And just a disclaimer, unfortunately, if you're the kind of person who is looking forward to buy a Lambo in one trade, I'm sorry, this is not the model for you. But if you're that person who wants to consistently make $500 to $1,000 every week and compound it even up to $4,000 a month, then this model will open your eyes to that possibility. After studying, make sure you go back to your charts and check this model for yourself. Okay? Don't just assume it works. Go to the charts in your TradingView and check if this model works. All right? Okay, so in getting into price action, you have to analyze the market first, and most people struggle. How do I analyze the market? I always hear people saying higher high, lower low, lower high, higher high, fair value gap, change of character, and lots of stuff. So in this model, this is how we are going to go through it. Having your chart set into the New York local time, mark between 1800 hours to 1900 hours. That's basically Asia session, the start of Asia session. Now, as you've marked the hour, 1800 hours to 1900 hours, I need you to check the highest candle in that range and the lowest candle in that range. Now, mark the highest point and then mark the lowest point. So, as we use this style, we are only anticipating entries after 1900 hours, and to be exact, probably, most likely, we want to enter as from 1915 going forward. Okay, so you mark your chart between 1800 to 1900. You mark the highest point in price action and the lowest point. You don't enter until we are past 1900, and now getting into the trade, you have to get inside past 1915. That is what I highly prefer. Okay, so you have to wait for price to take out either the high or the low. All right, but the fact that price took out a high or took out a low doesn't necessarily mean that, but the fact that price took out a high or a low doesn't necessarily mean that now you have to enter the trade. I want you to pause for a while. And now this is the point that will differentiate between a profitable trader and a gambler. You have to wait to make sure there's something which we call change in state of delivery. Okay? Change in state of delivery. You have to wait for that. And that one is always this in a nutshell. Whenever price is going high, like after price takes out a high, don't just take a trade going low. Wait for price to take either a short-term low, then retrace back to either an order block or a fair value gap. That is where you enter, but after it has either taken out a short-term high or a short-term low. And that is what I call the change in state of delivery. And that's how it is actually. So when you, after the change in state of delivery, mark any order block or fair value gap. You will always notice with price, with trading, it is something that you must keep on observing your charts. Then as with experience, you will know at this point I will use the fair value gap, and at this point I will use the order block. And it has to be days and days of interacting with your charts until you connect with them. Okay, so there are times when you look at price and you're like, this fair value gap is it's there. I'm gonna use it. It's so visible. It's standing out. I'm gonna use this fair value gap. Okay, but it depends on context, right? All this I'm going to be showing here in this study lesson. So do not be greedy. Just take the small price move and be satisfied. All right. So with USD JPY, some people watching this video come from third world countries, and in third world countries, I believe making $200 in a trade is not that bad. If you can target around $1,000 in a week trading, and that one, if you can compound it maybe to 3,000 or even 2,000 in a third world country, that is more than so. Like it's a lot, and it's enough, more than what people earn being employed. And so you are a step ahead. And So I just want to deal with the psychology bit of it, that get greed out of the way, get that Lamborghini out of the way, first understand price action. Some of you will ignore this video because I'm not teaching you how to get 1 million in one trade, yet you've never made $1 in a trade. And I've been there. I need you to start making $100. I need you to start making $30 every day and compound it at the end of the month. You'll notice you've made a significant amount of money. You don't have to be like Alex G. You don't. Okay? You don't have to turn $100 to $1 million. You don't. If you make $100 every day, and there are days you're going to lose, if you organize yourself well and you are able to make $200, $100 every day, at the end of the month, if you compound it, you're going to make a significant amount of money that is good for your upkeep and for your daily needs. Okay? Okay. So I'm going to get into the charts so much and no much outside talks and motivation. So let's get to the charts and let's see USDJPY. All right. So we are looking at USDJPY, and in this particular day, we see the dollar and the yen did whatever it does, and we are going to study. I'm going to explain to you what we are looking for and how we expect price to behave. Now, my time here is in New York time. All right. So I set my time in New York, and you should be able to do that. And so when you look at this chart, what I said is that you mark 1800 hours. This is 1800 hours. Okay? You mark 1800 hours, and then you mark 1900 hours. Okay? So we are going to analyze price using how price behaved in this time. Okay? This does not give you the ultimate direction of where price will go. No. But we're going to treat price in relation to what it did within this first hour, between 1800 to 1900 hours, New York local time. Okay? And so you mark them. All right? Now, I've marked this price range. And now, the next question is this. What was the highest point that the candle moved, and what was the lowest level the candle dropped to? And so this candle marks the lowest level. All right? This is the lowest this price was in this range. Okay? And this is the highest price moved in this range. Okay? You go ahead and mark those levels. Those levels are very important. The highest, the lowest. So those are our very key levels that we really want to observe keenly before we enter a trade. Okay? Now, pause. I know in the beginning I had a lot of talks, but now at this point I need your attention. Okay? Now, this point, you can forget about everything I said before if you want to, but this point I need you to be very, very keen. Everything I said before was the backbone, but this one is the bone, okay? Or this is the meat, all right? So you have marked 1800 and 1900, and now your time is in New York local time. Now, you've noticed the highest point in price action and the lowest point in price action, and you've marked them. Okay? So this is the highest level, and this is the lowest level. All right? Now, remember when I told you that we anticipate entry somewhere after 1915? Okay. You see, price took this level out, but it is way too early. Okay. There are two things that fails this one as an entry level for us. Number one, price took this out way early. Okay. And number two, even you remember when we were talking about a change in state of delivery, there is no change in state of delivery here. All right. So that someone should not ask like, why is it that you said that wait for the high to be taken out, and yes, it took it out, and why shouldn't we enter? Because of this. Number one, it is way too early. All right. And number two, there was no change in state of delivery. And I'm going to show you that as we go by. So we see price come here and take it out, goes down to this fair value gap. All right. Price is not giving us any clue that it wants to reverse. And then price goes up, fails to take this high, comes low, fails to take this low. All right. And then you see it touches that one again, goes down, and then takes out all these three moves, these three short-time highs. Yeah. Short-term highs. Yeah. This one, this one, this one. Now price takes it out. Now let's watch here. Now as price take this one out, right? Let us see how price moves. I want you to look at, when we talk about change in state of delivery, we're talking about price taking out a low. If price was going high and then price takes out a specific low, then we anticipate that price will want to go lower. Okay? I know I may have lost you here, but okay, pause with me. Now, if price takes out this high first, we want to look for trades going down. Okay? Now, as price has taken out this high, before price goes down, we have to look for some elements, and that is a change in state of delivery. So, we want to see price take out a specific low, and that will be a clue to us that price really wants to go down. And in this case, we look at the low, the short-term low that was formed prior to the high being taken out. You see this high? When it took it out, what was the significant low? The short-term low, I mean. It was this one here, right? So if price comes out and takes out this low, all right, then we are anticipating price to go lower. Okay? If price takes out this low here, we want to see price go lower. But, okay, I'm going to mark this low, okay? This low here. You see it? It's still here, all right? I marked it. Price has taken it out. Now, price will always retrace either to an order block or any inefficiency like the fair value gaps, all right? So, as price has taken out this short-term low, now we are sure that price is going to go down. Now, don't be impatient. To the people who are impatient, what they will do here, they will say, price already went and left me out. Let me just leave that trade. And they'll be like, why is it that price is not coming back to this fair value gap? Price breaks this low, retraces up a little bit, all right, then takes out this low. You'll be like, oh no, price has already got into our target. No, wait. Be patient. You're not in a rush. You're not in a hurry. Be patient, please. You have to be patient. Okay? All right? Wait. Sit there. They always say that 90% of trading is sitting waiting for a setup. Yeah? You'll have to always sit for long waiting for, because look at this. It is 19. You'll be seated for 1 hour. You haven't entered a trade. If you don't have patience, you'll be like, oh, let me enter here. This is a fair value gap. Let me enter here. Oh, it has taken out this high. Now it has formed a fair value gap. Let me enter here. You're taking out. You'll be like, let me get back again because now it will work. It was getting to this order block, and then you see price go down. Oh yeah, I'm winning. Oh, it just went back to my order block, and then it takes you out, and then you say that ICT is a fraud. No. Okay, he's taught all these things, and I'm gonna tell you that all these things are just taken out from his strategy. All right, and anybody fighting him, I don't understand why. Okay, so this is what we wait for, a change in state of delivery. It has been taken out. So we mark two things. We have a fair value gap and we have an order block. I love using order blocks. Okay, I love using order blocks, but you can use halfway of the fair value gap, and as long as you place your stop loss up here, it is still fine. So price has already taken out this low, price goes down, takes out this low, and then price retraces back. All right, I love using this order block. Okay, it is in this order block that I want to see entries in. Okay, because there's something price has done. Price has taken out the low that was formed before it took out the high, the first high. So that one has told me and has given me a confirmation that price wants to reverse. But before price reverses, price will go down, take this one out, and then retrace back to either a fair value gap or an order block. So with USD JPY, if I'm going to trade in the lower time frame, I love using the order block, right? Because if you use this fair value gap, okay, someone who used the fair value gap, if they entered here and they over risk the account, because most of you love getting in with your $20 and you just want to get in and go full margin, price yes goes halfway in your favor here, but then price now retraces back to this order block. Okay, and it may take you out if you had stacked in a lot of position here, which I don't prefer. So I highly recommend you get in the order block, and when it touches this order block, all right, here it is a bit okay for you. All right, so you enter here, price will go down. So some people in some scenarios, I'd like you to take something out here. Okay, take something out here. All right, but I prefer, my target has always been here, the end, the lower end, as we are marking the 1800 and the 1900. Okay, price gets into this order block. All right, I enter here. All right, and my exit is here. Okay, so this is my trade. I love putting my stop loss a little bit ahead of this high level, because sometimes price will always just come and wick off with just a tick, then go to your direction. So it always just hits your stop loss for no reason. So just to be on the safer side, I always just give it a little bit breathing room. Okay, and so you enter here until here and you take your trade. Pause, watch the video, watch the screen. Everything I told you is in this one screen. And I'm going to share this presentation in a PDF form. And so when you check the description of this video, you will find a link. You can just fill out the form and you'll get this presentation. I'm sharing it out to you for free. I'm not charging a single cent. Okay? You don't need any other thing. You just need this. You only need this, baby. You only need this. This is the only thing that you need, brother. This is the only thing that you need, sister. You don't need a million indicators there. You just need this thing every Asian session. Okay? So I'm gonna just go through it one more time. This is the 18 to 19 minutes low, 18-19 minutes high. Okay, price takes it out. There's a change of state of delivery here. Okay, now we wait for price to go to the order block. You enter here, bada boom, bada bam. You got it, baby. You got it, baby. You got it, baby. Tell me in the comment section, how are you finding this lecture? What should I improve on? This is my first video on YouTube, and I just ask you to please subscribe to this video, and I'm going to have more and more tutorials and more teachings to bring to you guys. Very simple. I struggle, by the way, finding someone who taught me how to trade on YouTube. There are lots of people, they have very nice thumbnails outside there, and you click on the thumbnails and all they do, they're selling their signal groups. Don't join any signal group. It's a waste of time. Learn how to trade on your own, struggle for 6 months. Then when you get out of there, you're going to be able to make your own money. Okay? Forget about the people you see posting online in the name of Forex influencers. Forget about people always affiliate marketing brokers and stuff. Nonsense. I want you to believe in yourself. Okay? I want you to believe in yourself. Okay? Have you seen what we did? This is what we explained. So one thing is that I think my neighbor likes making a lot of unnecessary noise, and I think that's a wake-up call that I should move to a quiet neighborhood. And my wife and my son are asleep, so it's the right time to record. And I'm tired. That the dog keeps barking, and if you're a dad outside there and you are struggling to provide for your family, learn this skill set. It will be something that can help you to be able to provide for your family, because the world right outside here is tough, man. It's so tough, bro. As a man, you just have to always have something, to provide for your family, to take care of your mom. And if you're a wonderful lady outside there and you just want to have your needs met, you just want to have your own cash, this is it. And if you have a son, if you have a daughter, big up, congrats, say hi to your little one. And this skill set can help you provide for your child if you master it. I tell people all the time, I tell my friends, stop trying to target $1 million in one trade, okay? Because you saw someone posted their profits outside there. It is okay you making your $90 even twice a week, okay? It is okay. Make that $90 twice a week, okay? That is $160. Withdraw $90, leave $90 to trade with, okay? That $90 can sort a bill, all right? Can buy a meal for you and your child, and you guys will go with food. Stop comparing yourself with people outside there, all right? I'm not saying they're not making profit. They are making profits, but you don't understand their journey. What they have to lose is not the same as what you have to lose, okay? So in my teaching style, I learned from ICT. So ICT has a tendency of just storytelling inside trading lessons, and I think I'm picking it up, and I'm sorry. So I'm going to give you a second example, because if it happens once, it may be just by chance, but I'm going to give you another example just very fast. So as usual, this is another day, another wonderful day where we mark the 18 and the 19. We mark the high and the low, and then we wait for price to either take out the high or the low. Same this day. I want you to note. Now, this is something that is a personal preference, that whenever price is choppy like this, when I'm looking for a change instead of delivery, I like marking the bodies and still expecting the wicks to be taken out. Okay? Yes, I like marking the bodies, but still expecting the wicks to be taken out. So I mark 18 to 19, and price goes. The price takes out the high, you see. And this week, is it enough? I don't know. But I like to see this. Okay, so price goes up, price comes down, and this is a very, very heavy point in price action. Okay, so when you see here, this is a price inefficiency. You see this gap? This is a very, very important level. Okay, you see the gap here? These ones are some of the gaps that you need to learn to see while anticipating price action. Okay, so you see here there was a fair value gap. All right, but when you see on top of this fair value gap, there is this imbalance. Okay, a very important aspect in price action. Okay, and this imbalance also coincides with this order block. So you remember when I was selling that certain times as you grow in experience, you'll always know when to use a fair value gap, when to use an order block. All right, so price goes down. I wait for price to take out the low. You see the low of price before it took out the high. That is the low I'm waiting for price to take out first. Okay, yes. So this session here, I don't see price taking out any high or low. Price goes, it doesn't take it out. Price goes down, and then price goes up, takes out the high. Price goes and takes out this low, giving me a signal that it wants to go lower. And then price retraces back to this imbalance that is in alignment with this order block. This order block, I enter here. All right, this is where I enter in this price action. And where do I exit? Bada boom, bada bang. The same thing happening again. Go to your charts. Go to your charts and study this very well. You will see the same thing happening. Okay? Now, I'm going to give you a third example. And this is how to identify when the model is going to fail. Because this strategy is never going to work 100%. Okay? And the time that it's going to fail, you will know that it is going to fail. All right? And when you see it is going to fail, you don't take a trade. All right? And also a few tips. I generally avoid trading the first Asian session of the week. And I also try to shy off from the last Asian session of the week. So on Friday and on Sunday, I just generally avoid it, or I approach it with highest level of caution. All right? I approach it with the highest level of caution, or I avoid it, because when you expect price to be a little tricky, you don't want to play with your money. You want to go and trade when there are opportunities for you to get out with something small. And we are here to get out with that $100, that $200, that $300, that $1,000. Okay? And as I told you, we are here to make something to sustain our families, our homes, ourselves, and our dreams. Okay? Yeah. So now we're going to look at an example of when this strategy fails. And in this particular day, it was on a Tuesday, the 3rd of February 2026. That's the day I'm studying. You mark 18 as we studied, and then you mark 19. All right? As you mark 18 and 19, we wait for price to take out the high. But remember what we studied. We have to see a change in state of delivery before we go on the opposite side. So price takes out this high. So what is the low that was formed before this high was taken? It was this low. Okay, here. So if we were going to anticipate a change in state of delivery, we were expecting price to either take out this and then retrace back in order for us to take a trade. But it didn't. So price went, formed this fair value gap here, and then took out this high, forming a fair value gap here. All right. Price retraces to this fair value gap, goes higher. And yes, price goes lower than this. Okay. But it doesn't take out this. And also doesn't take out this low. That one already tells you that price most likely will not go lower. and in many cases it happens when price is trending. Okay, and in such a case, we want to avoid this because there was no change in state of delivery. You see price now go higher, and go higher. All right, don't try getting here. Don't try getting here. That is no. This one is a no trade. This one is no trade. There is no trade here, bro. There's no trade here, sis. Do not trade when the setup is not setting up. Don't trade when the setup is not setting up, brother. I know we are 40 minutes into the video, but let me tell you something. It is better than the many years or the many months you spent trying to get a trade and you are not profitable. This is your trade, okay? This time is worth it, all right? I want you to go into your trade, into your charts, and follow what we've done here. And I'm going to share this presentation, okay? So there's a link on the description to have this presentation, and you're going to have it for free. I'm not selling it, or should I? No, I won't. I won't sell it. I just want you to subscribe to this channel, okay? Subscribe to this channel. Talk to me on the comment section. Tell me something, and I'm going to reply. I want to talk to you. I'm an extrovert. I love talking. And I love chatting, okay? Talk to me. Say hi. If you're a mom, if you're a dad, I want to know how's life. If you're a young man and maybe building your life, I want to know how life is. And okay, is that good? So, for example, when the range is not clear, this is the very first one, I promise. This is the very last one, I promise, okay? So, there are certain times when even as price goes between 18 and 19, and I know I tell you to mark the highest range and the lowest range, there are certain times when it is not clear, okay? It comes out not clear, all right? And that is what you want to look. All right. You see, in this day, it was on a Thursday, from 18 to 19. If you mark 18 here to 19, price is going down. Like there's a fair value gap, it goes down, and then fair value, and it is like really trending down. Okay, and when it gets to 19, okay, in the middle of 19, it goes down. And there's no significant high or low, because you're asking yourself, if this is 19, then should I count this low here, or should I count it? Which should I mark here? Like, should I mark it like this? Because this is how I started. I should mark it. But then at 19, price was going low. So in that scenario, according to my personal style that I'm not going to share here, I'm going to share with you the right style, the most let me say it, a more cleaner style. But my style is that I always anticipate for price to take this low that is formed here, before I take the trade higher. All right, because I always want to see this as a manipulation. Somebody who has less experience will say that, okay, price took out this one, I want to enter this order block. And indeed, when you see this order block, when price gets to this order block, it starts going up a little bit. And then there are those people who love stacking trade, and they're like, oh, it's going up. I'm going to add trades. You add. And then boom, it takes you out. Okay? So I'm going to tell you how to handle this price action. When you see at 19, price is still going down, and there is no clean low or clean high, I want you to go back to the 15 minutes time frame. Boom! I have these things in my mixer. Is that right? I want you to go to the 15 minutes time frame. Okay? I want you to go to the 15 minutes time frame, and I need you to mark. Okay? This is the same. You see, this time here, even if you use the information I said earlier, I don't want to see price taking out the low in the first 15 minutes, because in many times it is not a clean liquidity sweep. People call it liquidity sweep. Yeah, that is how we call it. So I found people calling it liquidity sweep, and I'm gonna call it that. So at that point, I'd never trust that move. And in many cases, I anticipate for that move to first be taken out, then that is when I'll enter the trade. Okay? So, but the clean move is that I need you to toggle to the 15 minutes time frame. Okay? 15 minutes time frame. That's what I need you to toggle into. Okay? And now this is the same chart, 15 minute time frame. Okay? It has been trending down. Okay? So what I want you to check is this. What is price trying to do? Okay? When you look at this other side, and I told you that whenever price has got so many wicks, I love to use the bodies. Okay? But I anticipate price taking out the wick. Okay? All right? So when I move here, this is the body. Price takes the low. So I see that this move here, it was coming for this level. All right? So price was coming for this a level in price action. Okay? And I want to see price take this one out. Okay? I am in the 15 minutes time frame. I look for the opposing, the other end, the end before this time. Okay? And now I want to see what was price going to do. And you see price was trying to take out this low. Okay? And you see price take it out here. Okay? All right? And then price goes, because this was the low that was taken out, price goes up. Now, some people will want to take the trade here. I don't encourage that, because you see with this one, this high was not taken. There was no change in state of delivery. Okay? I wait for price to take out this high. Now, price takes it out. And where does price retrace to? This order block, which is in alignment. No, this fair value gap, price retraces to this fair value gap, which is in alignment with this order block. Isn't that amazing? So I'm not only teaching you how to trade this, I'm telling you also situations and occurrences that will happen that will make the strategy to be a little difficult, but still you can always find your way through it. This training here is the only forex trading strategy that you need, baby. You only need this, bro. You only need this, partner. You don't need any other thing. So, this is a fair value gap. It is in alignment with this order block. Okay? So, there is already a change in state of delivery. Okay? You remember the move that took out this liquidity sweep. It is here. We can't get in here or here because this move did not take out this level. Okay? Until price goes and takes out this short-term high that moved as it was taking the liquidity, that is when you want to look for an entry. And this fair value gap here, baraboom, barabang. You enter here and you exit there. Okay? And this is a little bit, angel here. You're praying, oh Lord God, Father, in the name of Jesus Christ, may this trade work out. May this trade really work out. Oh, yeah. That's it. Take time and look at it. Look at that, how clean it is. This one now we are using the 15 minutes. Okay? So this is when the low is not clear. All right? Yes. You could mark. There are many ways to approach this, but I want you to stick to this one. Okay? Only when the low is not clear. Okay? Now, I know most people are struggling with trading, and that is okay. I struggle too. There are times when it is just so hard, and I just want you to know that the fact that you have sought knowledge, backtested, and have your strategy, stop trying to learn more and stick to that one strategy that works for you. Yes, I know when you go online, you see these people buying cars and posting all sorts of things. Do not worry yourself. Do what works for you. Even if it's 2,000 per week or even a month, you will grow from there. All right? Until next time, may God bless the works of your hand. Okay? Don't forget to subscribe and be part of this learning journey. This 2026, you are going to be profitable. Okay? You have to subscribe to this channel. All right? It is actually a new channel, and I'm looking forward to being of benefit to you guys. But also, I request that you only subscribe to the channel that it may grow. And I'm so happy to be here with you guys. Until next time, guys, see you guys later. God bless you. God be with you. May the good Lord cause his face to shine upon you and give you peace. God is good and God is real. God will help you, and God always hears your prayer. All right? Thank you.